Inflation is hitting consumers hard these days, and you might be looking closely at your paycheck, wondering how to make it stretch. Here's how to make sure you're setting yourself up for success. For starters, when making a budget, it's important to consider your net pay, not your gross pay. The gross pay is what you and your employer agreed upon when you got hired. The net pay is the actual money that hits your bank account every month after things like taxes, insurance, and other benefits are taken out. Some of those deductions are non-negotiable, like Social Security and Medicare. Social Security tax is 6.2% every month and pays for things like retirement and benefits for disabled people and survivors. Medicare is taxed at 1.45% every month, and it pays for health insurance for people over the age of 65 and some younger people with disabilities. Then there's the federal income tax that pays for national programs like national defense, law enforcement, social programs, and so on. The tax rate depends on your income, which determines your tax bracket. And finally, there's the state income tax that pays for local programs like roads and bridges, education for children, and so on. The tax rate varies by state, and some states have no income tax at all. If you're not sure where you land, there are many tax calculators online that can determine how much will be deducted out of your paycheck depending on your income, location, and other variables. The other set of deductions that come out of your paycheck are benefits. What you need to determine is which ones are pre-tax and which are post-tax. Pre-tax benefits are deducted from your gross pay and actually reduce your taxable income, which means they lower your tax bill. These are things like your health insurance, your 401k and other retirement plans, and life insurance. If you're looking at your paycheck and hoping to increase what you take home, you might feel tempted to cut back on those benefits and deductions, but that wouldn't be a good idea for several reasons. First, these are typically important benefits that you should have, like health insurance. Second, these benefits are pre-tax, which means that they lower your taxable income and cut your tax bill, which saves you money in the long run. And third, they make a much smaller difference than you anticipate. A few dollars back in your pocket every month is a small relief in the short term, but a big damage in the long term. So because of these long-term benefits, it's actually worth your time figuring out if there are more pre-tax benefits that you can deduct from your paycheck. For example, commuting. It will look like there's less money in your paycheck every month, but actually that will save you money in the long run and get you more bang for your buck. So when you get your next paycheck, take a moment to look at that pay stub. I know it can be intimidating to look at all those numbers, but after watching this video, you should be recognizing every number on that pay stub. And if there's a number you don't recognize, make sure to talk to HR. And make sure to ask them what other benefits they offer that you could take advantage of. And if you want more content like this from MarketWatch and the Explainomics playlist, please subscribe and keep checking back for new videos, and we'll see you next time.